Refinancing student loans. Are you feeling overwhelmed by your student loan debt? Are you looking for ways to lower your monthly payments and pay off your loans faster? In this video, we'll explore the option of refinancing student loans and give you the tools you need to make an informed decision. From the potential benefits of refinancing, to how to determine if it's right for you, to alternative options for managing your student loan debt, we've got you covered. So if you're ready to take control of your financial future, stay tuned and let's dive in. Refinancing student loans involves taking out a new loan to pay off your existing student loans. The goal is to secure a lower interest rate or more favorable repayment terms, which can ultimately save you money over the life of your loan. So, why would someone want to refinance their student loans? There are several potential benefits to refinancing student loans, which we'll explore in more detail later on. But in short, refinancing can help you lower your monthly payments, pay off your loans faster, or simply make your debt more manageable. Now, let's dive into the specific benefits of refinancing student loans. Lower interest rates. One of the main reasons people choose to refinance their student loans is to secure a lower interest rate. If you took out your student loans when interest rates were higher, refinancing could potentially save you thousands of dollars over the life of your loan. For example, let's say you have a $30,000 student loan with a 7% interest rate that you're paying off over a 10-year period. If you were able to refinance a 5% interest rate, you could save over $6,000 in interest charges. Consolidation of multiple loans into one payment. If you have multiple student loans from different lenders, refinancing can help you consolidate them into a single loan with one monthly payment. This can make it easier to keep track of your debt and ensure that you're making all of your payments on time. Flexibility in repayment terms. Another benefit of refinancing is that it can give you more flexibility in your repayment terms. For example, you may be able to extend your repayment period, which would lower your monthly payments but increase the overall amount you pay in interest. Or, you may be able to choose a repayment plan that's based on your income, which can help make your student loan payments more manageable. The opportunity to release a cosigner. If you took out your student loans with a cosigner, refinancing can give you the opportunity to release them from the loan. This can be especially important if you have a strained relationship with your cosigner, or if you want to take on the full responsibility for repaying the loan. While refinancing student loans can offer some significant benefits, it's not the right choice for everyone. Here are a few things to consider before deciding whether refinancing is the right option for you. First, consider your credit score and income. One of the main factors that lenders consider when deciding whether to approve your refinancing application is your credit score. If you have a high credit score and a stable income, you may be more likely to qualify for a lower interest rate. On the other hand, if you have a low credit score or unstable income, you may have a harder time finding a lender willing to offer you a competitive rate. Compare rates from multiple lenders. It's important to shop around and compare rates from multiple lenders before deciding on a refinancing option. You can use online tools like Credible or LendingTree to get quotes from multiple lenders in a short amount of time. Review the terms and fees of the new loan. Be sure to carefully review the terms and fees of the new loan before committing to it. Some lenders may charge origination fees or prepayment penalties, which can add to the overall cost of the loan. You'll want to make sure that the potential savings from refinancing outweigh any additional fees you may incur. Calculate the potential savings from refinancing. Before you decide to refinance your student loans, it's a good idea to do the math and see how much you could potentially save. Use an online calculator or speak with a financial advisor to get an idea of how much you could save over the life of the loan based on your current interest rate and the rate offered by the new lender. If you've determined that refinancing your student loans is the right choice for you, here's how to get started. Gather required documents. The first step in the refinancing process is to gather all the necessary documents. This may include proof of income, tax returns, and copies of your current student loan statements. You'll also need to provide information about your current employment and any co-signers that may be on your loan. Compare rates and terms from multiple lenders. As we mentioned earlier, it's important to shop around and compare rates and terms from multiple lenders before deciding on a refinancing option. Use online tools or speak with a financial advisor to get quotes from multiple lenders. Choose a lender and apply for a new loan. Once you've found a lender that offers a competitive rate and favorable terms, you'll need to apply for a new loan. This typically involves filling out an online application and providing the required documentation. Next, provide required documentation and complete the refinancing process. After you've applied for a new loan, the lender will review your application and may request additional documentation. Once your application is approved, you'll need to sign the loan agreement and provide any remaining documentation. Once you've completed these steps, your existing student loans will be paid off and you'll begin making payments on the new loan. If you're enjoying the content so far, make sure to hit that subscribe button to stay up to date on all our future videos. By subscribing, you'll be supporting our channel and helping us create even more great content. Now back to our topic. While refinancing student loans can offer some significant benefits, there are also some potential drawbacks to consider. Loss of borrower benefits. If you have federal student loans, you may be eligible for certain borrower benefits, such as income-driven repayment plans or forgiveness programs. If you choose to refinance your federal loans with a private lender, you lose access to these benefits. The potential for longer repayment periods. While extending your repayment period may lower your monthly payments, it can also increase the overall amount you pay in interest. If you're considering extending your repayment period, be sure to carefully consider the long-term financial implications. And finally, fees associated with refinancing. Some lenders charge fees for refinancing student loans, such as origination fees or prepayment penalties. Be sure to carefully review the terms and fees of the new loan before committing to it, to ensure the potential savings outweigh any additional cost. If you're struggling to manage your student loan debt, refinancing may not be the right choice for you. Here are a few alternative options to consider. Federal repayment and forgiveness programs. If you have federal student loans, you may be eligible for certain repayment and forgiveness programs. These programs can lower your monthly payments or even forgive a portion of your debt based on factors such as your income or the type of work you do. Consolidating federal loans. If you have multiple federal student loans, you may be able to consolidate them into a single loan with a fixed interest rate. This can make it easier to keep track of your debt and ensure that you're making all of your payments on time. And here's the last one. Seeking assistance from a nonprofit organization or financial advisor. If you're struggling to manage your student loan debt, you may want to consider seeking assistance from a nonprofit organization or financial advisor. These resources can help you better understand your options and develop a plan for managing your debt. In conclusion, refinancing student loans can offer several potential benefits, such as lower interest rates, consolidation of multiple loans into one payment, flexibility in repayment terms, and the opportunity to release a co-signer. However, it's important to carefully consider the potential drawback, such as the loss of borrower benefits, the potential for longer repayment periods, and fees associated with refinancing. We hope this video has given you a better understanding of the options of refinancing student loans and the potential benefits and drawbacks to consider. Remember, it's important to carefully research and compare your options. Consider your credit score and income, and calculate the potential savings before deciding to refinance. Ultimately, the decision to refinance your student loans is a personal one that depends on your individual financial situation. Be sure to carefully weigh the pros and cons and seek the advice of a financial professional before making a decision. And if refinancing isn't the right choice for you, there are other options available, such as federal repayment and forgiveness programs, consolidating federal loans, or seeking assistance from a nonprofit organization or financial advisor. We encourage you to seek out additional resources and consider seeking the advice of a financial professional before making a decision about refinancing your student loans. Thanks for watching, and we'll see you in the next video.